So in this video, I'm going to basically be doing a homework review for one of the students. Basically, I assigned it to him yesterday, and he was able to send that over to me today. So if you see me looking up, it's only because I have a second screen where I have his notes and what he wrote down for his answers and stuff. So if I bring that down here, you guys can see what I'm looking at. And I copied and pasted that over here. So this is just a video response to that. And basically, I don't feel like typing everything. And it's just, I think it's going to be great in the course for people to review and be able to see this. So let's back up here. All right. So the original assignment was basically something like this, where I basically just drew this up randomly. And I said to break down every point of structure by labeling every point and being able to then explain to me what was going on in the market at that point in time. And so his answers are here. Let me bring that down. His answers are right here, where you're able to see that he labeled everything. And I went over what he labeled. And obviously I have the correct answer, which is compared to mine. And so let me go here. And so far, after we did that one-on-one call yesterday, where we went way over at like almost 3 hours of time. And let me see, pull that back up here. Let me pull that. Allergies are crazy. Here it is. There you go. So the only points that I saw that I'm going to basically go over is this point right here. Where he has higher high / lower high and break of structure. And this area, let me see. I think that was the only one I seen that was wrong, because we went over structure yesterday in price action, and he took a lot of notes and he was very detailed with what he was doing, because I could see that he applied it to the charts, which I like to see. So let me explain. So with this flow of structure, right? So guys, price action is literally just a flow of price. So whether the market is going up, down, sideways, however it's moving, that's price action. It's just in basic form, movement of price. Now, market structure is how we then can label those movements of price action by being able to label points of structure like lower highs, lower lows, higher lows, higher highs, highs and equal highs, and so on and so forth. And as we label these things and see price action moving, we're able to then see, hey, the market's either going on an uptrend, a downtrend, or it's range bound, or there's been a break of structure and the direction's been shifted, so on and so forth. So as you can see here, the market was at a high point. We created a low. This low point, like Deshaun mentioned in his notes, this is an area of support, because when the market found that low point, it bought back up to create a lower high point, which is correct. From that lower high point, we were able to make a lower low, which is then the continuation of that selling pressure. Again, guys, a lower high is only valid if it makes a lower low or an equal low. Anything else is usually just the market giving you a sign that it might be retracing a little bit deeper. So once we made that lower low, the market then found an area of support, and that's where it bought off, like Deshaun mentioned in his notes. That's where the market buyers are able to buy off to create the next potential lower high. That lower high then created a higher low. Now, guys, a higher low on a downtrend is just a sign for you to be cautious that, hey, selling pressure is weakening and buyers were strong enough to be able to stop their advance to create a equal low down here, instead stopping them somewhere here to create a higher low, which is then a sign that bullish pressure could come into that market, which, as you guys can see, it did by making a new higher high on lower time frames, but it's a lower high on overall the overall higher time frame structure. So that's the only spot where I saw that Deshaun was wrong, where this area is actually not a break of structure. It's not a break of structure because this lower high up here is the lower high that made this lower low. So since price is fluctuating between this area here marked off by this zone, since it's fluctuating between this lower high and this lower low, that structure, that downtrend structure is still valid. So this is not a break of structure, but on lower time frame. So let's say this lower high was made on the 4-hour time frame and this lower low is made on the 4-hour time frame as well, this lower high and higher low transition that you see here, it's the lower time frames like M15, M30 going on a deeper retrace, because since this lower high up here was not broken, and when I mean broken, you didn't see that buyers continued any higher past that area. It stayed within that range. It was just a deeper retrace where this is now your valid lower high, which then made this lower low. That then continued the trend being bearish. Then you had another similar pattern where the market then created another lower high, followed by a higher low, lower high, higher low. Now, as you guys learn more and more, you'll see that these are patterns. Like this is a symmetrical wedge, which just shows that there's a buildup of selling pressure and buying pressure almost almost evenly, where bulls are coming up higher and the selling pressure is coming in lower, but they're continuing to press pressure into the end of the wedge where one side is going to win. In this situation, the buyers were able to break out of that wedge to the upside, which allowed the market to continue on a deeper counter trend. But again, guys, since this lower high up here has not been broken, instead, this higher high here, which again, it is a bullish sign on lower time frames, but on the higher time frame, we did not break structure. Instead, it was just a deeper retrace. Structure was not broken until this higher low here created this higher high, which then broke that lower high point, allowing the bulls to step into the market and allowing that transition of structure to occur. So now, once we then made this higher high up here, we then made a higher low. Now keep in mind, guys, all these lower highs are areas of resistance like here. Higher highs are areas of resistance because remember, for a higher high to form, right, once the market buys up, it hits a level of resistance where selling pressure comes in, bringing price lower, validating that higher high, and then allowing buyers to make a potential higher low to continue price higher, which it did over here. So now once we created that higher low here, you can see this area used to be an area of resistance. It then got retested as an area of support. And then the market created another higher high, showing you that now we're on a bullish trend, where in this side of the market, we'd be looking for more. If you guys said it correctly, it'd be buys. So now once we took those buys down here, we would have made some money once the market got to these levels up here and eventually up here. So then we created a higher low right here, followed by a lower high. And again, this is just the opposite of what you see in this area. On an uptrend, when a lower high is formed on an uptrend, that is just a sign that selling pressure might be picking up and that you got to be a little bit cautious because that lower high could be strong enough for selling pressure to eventually make a lower low, breaking, ultimately the structure that's over here, as you guys can see. So, as you guys can see here, we had this area here that was a higher low, which is an area of support. That area got broken. The market then created a new lower high, which was then a break and retest of previous levels of support, turned resistance. That lower high created a higher low, and then that higher low then came back, retesting that lower high, creating equal highs, followed by an equal low, then an equal high. And as you read the notes and as Deshaun said down here, you can see that the market started to consolidate. As you read his notes, it is very in tune with the market. As you continue to practice, Deshaun, and you continue to, study the charts, you'll be able to see these things a lot better and being able to make these decisions live. Because remember, guys, all of these examples that I made here are post market movement, right? Meaning that when the market's moving live, you have to be able to analyze and be able to make those decisions to anticipate what's going to happen next. So if I'm seeing things like a higher high being formed, breaking a downtrend structure, I'm already going to be looking for price to potentially retest this area support, or maybe you might get a quicker retest at this area that used to be resistance, potentially becoming support. Once the market crashed through that level and broke through it, I'm not looking for this area to hold as support anymore. I'd be looking for the next area, which is down here, which I would have been valid. I would have been actually right on that. I would have taken buys. Stop losses would have been below this area, and I would have been targeting the first high here as my first take profit, and then anything above would just be, my next levels of take profits as it continues to move in my favor. But ultimately, This was good. You were overall very correct on most of these things. And the only point that I saw that I wanted to go over was that this area is not a break of structure. It looks like it, but the key details that you want to focus on is that this lower high is what initiated this downtrend here and this lower low. This lower high is just a lower high because it's lower than this previous lower high. But this right here, this higher low is the first sign that would have told me, hey, we're just going to go on a steeper downtrend, a steeper counter trend. And as long as this area up here does not get broken, I would still be looking for sells, maybe finding an area of supply somewhere along this area. You know what I mean? Or if there was one down here, depending on what the candlesticks were looking like at that point in time. But again, this is the video reviewing the homework. I hope this helps you guys in where you'll be able to study this and apply it to the charts. So see you next video.